My dear students, good morning to one and all. Today we would like to discuss section 28 and scheme of computation. All of you please be listening here. Section 28 deals with what are all the incomes which are chargeable under this head. Section 28 clearly mentioned that following means this mentioned or pointed incomes are chargeable under this head income from business. First one, business or professional income. Second one, any compensation or other payment due to or received, or income of trade association, receipts in connection with the foreign trade, the value of any benefit or perquisites, interest, salary, bonus, commission or remuneration received by a partner, speculative transaction, any sum received as a result of demolition, destruction of capital assets. So, first one, business or professional income. Any profit or gain from business or profession which was carried on by the assessees at any time during the previous year are assessed under this head. It's a very simple thing. The next one, any compensation or other payment due to or received by. That means any person managing the whole or substantially whole of the affairs of Indian company in connection with the termination of his management or modification of the terms of employment, or in connection with the termination or modification of the employment, a person may receive some compensation, or in connection with the vesting in the government or any corporation owned by, controlled by the government. In these situations, some compensation may be received. These are chargeable under the head income from business. The next, income of the trade association. Any income which is derived as by any trade association or professional association is called this. For example, income earned by Chamber of Industries. They are organized a seminar. Any income which is generated as a result of these are chargeable. Then receipts in connection with the foreign trade is very simple, no need of explain. Then next, value of any benefit or perquisites. That means whether convertible into money or not, arising from the business or from the profession, such as gift received in course of business. This should be chargeable under this head. Otherwise, these perquisites may be received as a part of salary. It will be chargeable under the head salary. Any perquisite which is received as a part of this business, it should be chargeable under the, it must be chargeable under the head business income. Then interest, salary, bonus, commission, etc. received by the partner. Then any speculative transaction. All that's very simple, self-explanatory. That is why no need of explain. Then in some received as a result of some demolition or destructions of the capital assets. That means any amount which is received in cash or in kind by means of demolition or destruction or discard of the taxable capital assets, that is chargeable under the head income from salary, income from business, and it is allowed as a deduction under section 35 AD. Okay, that we will discuss in later. Okay, these are all the chargeable incomes which are chargeable, which are assessed under the head income from business. Then next, some important rules regarding the assessment. There are 4 or 5 rules, important notes. First one, business or profession carried on by assessee. That means the business or profession must be carried on by the assessee in the relevant previous year. Okay. Then next one, it is charged, tax is charged on aggregate income from all business. That means, suppose an assessee carried on some profession or a business in different units, as a different units. So tax is charged on aggregate income from all business. Net result of each business or profession carried on by assessee is calculated separately, and then the result all The business are added and tax is calculated and levied. Okay. The next, profit or loss on speculative business. Some speculative business may be carried out by this assessee to be kept separately. Loss incurred in speculation business can be set off only against speculation profit and not against other business profit. It's a matter which will be discussed in detail at the time of while we are discussing set off and carry forward. Okay, just you have to understand here the meaning. The next, expenses for earning income are allowed as a deduction. Any expenses which is committed as a result of earning any profit can be claimed as deduction. The next, expenses incurred prior to the setting up of the business will not be allowed. That means expenses incurred before setting of the business will not be allowed except where specially provided by the law. What are the specially provided items? Section 29 says that the profit under this head is calculated in accordance with the provision contained in section 30 to 43D that we are discussing in our previous classes. Okay, that's all about the important rules regarding this income from business. Then here I posted a slide that is scheme of computation. How to prepare, how to calculate. All of you, when you are getting a problem to calculate taxable income from business or profession. So first we can see scheme of computation of business income, and next we will discuss how to calculate business income. Today we can calculate business income. How to calculate? There is a statement. First of all, you have to write profit as per the profit and loss account. Always you will get a profit and loss account, audited profit and loss account. Based on this profit and loss account, you have to calculate taxable profit from business. So how to calculate taxable profit? There is a profit which is calculated as per the provisions of the Indian Financial Accounting Standards. So we are recalculate it based on the provisions of Income Tax Act. So first you have to write profit as per profit and loss account. Then here we have to mention profit as per profit and loss account. Then add some items, less deduct some items. Which are the items to be added? Which are the items to be deducted? It's a very simple thing. After the net result will be the income from business, taxable income from business. Okay. So what are the items to be added? It's a very simple thing. Add some disallowed expenses. That means some expenses which are debited in profit and loss account, which cannot be allowed as a expense as per the provision of Income Tax Act, that we have to add back with profit. Getting some expenses which are not allowed, that is added. Expenses are shown on the debit side of the profit and loss account. So what are the expense that you clearly mentioned in our textbook and provisions? Let us discuss in our next classes. So expenses which are not allowed will be add back with a profit. Then again some incomes which are admissible but which are not shown in the credit side of the profit and loss account. You may get some additional information. So some of the incomes which are not seen in our credit balance or credit side of the profit and loss account, even though these items are considered as an admissible incomes, such items can be add back. Two things we have to add. First one, expenses not allowed. Second one, admissible incomes. These two things add back with the profit. And two things we have to deduct. Which are the two things? First one, income not allowed. Some incomes which are shown on the credit side of the balance sheet or profit and loss account, which are not allowed as per the provisions of Income Tax Act. It should be deducted. It should be deducted. And some of the expenses which are not shown on the debit side of the profit and loss account. It may given in your additional information. All expenses are allowed as per the provisions of Income Tax Act. It should be deduct. Okay. So these are all the four important points. Two things you have to add back with the profit. Two things you have to deduct from the profit. Then you will get taxable income from business. Clear? This is the format which is usually used for calculating taxable income from business. Clear? Thank you. Thank you to all.